Hey traders, Raghee here. Welcome to Charts and Coffee for this Monday, May 30th, Memorial Day. On a day like today, when we do have the markets open, in fact, you'll notice the futures markets are trading, and we have a bank holiday, I want to be a little bit more cautious about liquidity and volume and what it is we're dealing with on a bank holiday. And I think also it's Memorial Day. It's a really good day for me personally to remember two things. One, I am, and you all as well, I'm hugely honored and privileged to be able to do this, to sit and talk about the markets from my home with you all, pursue this passion that I love. And Memorial Day just reminds us that a lot of folks sacrificed everything to give us this opportunity. So that's never lost. And that's an everyday thing, right? It's not just a today thing. But between the sales and the barbecues and everything else, I hope you take a minute to remember that. We're really, really fortunate. And right now, we're dealing with a week as we go into June that we're going to be dealing with a little bit more bullishness. You'll notice here, this is the S&P. And again, remember, while the equity markets are closed, the futures markets are open. Now, of course, they're far less liquid than they would normally be, but they are open. And it makes sense to take a look at least at what that sentiment starting the week was. And it is bullish. We've actually seen a higher high in the NASDAQ. We're seeing higher highs in the S&P, higher highs in the Dow, and higher highs in the Russell. Now, this does not necessarily mean come Tuesday, when we really have our general market open, we're no longer in a bank holiday, liquidity comes back, volume comes back. Doesn't mean we're going to continue, but there's a saying that's been in the market for traders, it's a market saying that's been around forever. And that is, don't fade Fridays, especially 3-day weekends, but definitely don't fade Fridays. In other words, and by the way, don't fade any close. That closing sentiment, that closing momentum, the movement that got us to the end of that session, if it was as bullish as you can see Friday was, it's really not going to be surprising to see a little bit of that follow through. So we don't want to fade Fridays. We don't want to fade close. We don't want to presume that surge isn't going to attract more buyers, or if it's a sell-off, that surge lower isn't going to attract more sellers, whichever way the movement is. We don't fade Fridays. We don't fade closes, period. So that's another aspect of this to keep in mind. And as we go through some of these major indices, the thing to remember is there are places we have trends. We don't have trends on the indices yet. We do not have a trend in crude oil. We actually are wobbling a bit on our trend in gold, but we did have a downtrend that's gone neutral just most recently. We continue to have a very strong uptrend in RBOB gasoline. We continue to have a really strong trend in natural gas, and we continue to have a trend even in dollar, but notice here, not necessarily against the euro. Where is our trend in terms of the dollar? Well, we've lost that trend on the Aussie, where we lost that trend on the yen. We've lost that trend on the pound. So you might say, Rog, does this mean we're long dollars? No, what it means is that in this case, sell the rip, sell the rally is no longer valid, but we should respect the trend that was. And now we'll be focusing on 6A, 6B, 6E, 6J. We'll continue to focus on US dollar strength, but we also want to remember that we're really focused more on an overbought bought short. So it's really about, at this point, is that slow stochastic overbought when we're in that yellow non-trending environment? So we have a number of those situations here. Another trend that's caught my eye is copper. Copper was in a downtrend. It's gone a little bit neutral. It's still in the lower half of the wave. And something that's unique about this surge in equities is copper and crude are still decidedly bearish. And if we're really optimistic about the economy, copper and crude should really be they should participate. They should be sort of our barometer for that. If the optimism in the equity markets is somehow that we're not going to see as hawkish, as aggressive a tightening policy from the Federal Reserve, that's not really economic optimism. That's just really the punch bowl is not going to be necessarily as unspiked as it has been. So you'll notice when we have economic optimism accompanying equity strength, copper and crude should usually participate. We don't have that. So that's something I'm keeping in the back of my mind. All right. So with that being said, I did not alert today's show, mainly really just, again, it's a somber holiday here in the States. I know some of you are tuning in from other countries. And again, thank you for your time. Everybody, thank you for your time. I like to start off the mornings. I look at the Saturday, every single day of the week. Doesn't matter, Saturday or Sunday. I get up, I take a look at the charts. I really just take a quick peek because in the morning, fresh eyes, sitting down with a little cup of coffee. And just, again, the fresh eyes, am I seeing anything differently than I might have been in the heat of the movement, in the heat of the surge or the sell-off, whatever it might be. And then on a day like today, again, between the picnics and barbecues and sales and everything else, I opened up my email and, all the sales, I like to remember that I get to pursue this passion of mine with you all. So grateful. And, a lot of folks sacrificed everything for us to be able to do this. So I like to keep that in mind as well on a day like today. So I did not alert it out, but this will be available, obviously, at the Simpler Trading YouTube channel. And thank you for those of you that did tune in. We'll be back to our regular schedule and I'll start alerting out everything come tomorrow. I'll probably be working on my notes tonight as we see the Asian Open tonight, working into Europe and UK. But again, notice we do have an open futures market. Just the equity markets are closed. All right. So with that in mind, by the way, people ask, do you trade on a day like today? No, I will not for two reasons. One, I want to spend some time with my family and just relax and appreciate some time with them. And two, tactically, right? Tactically, it's very illiquid. And illiquidity is a trader, really in many ways, even an investor to a certain degree, but definitely a trader's, it's a challenge to trade illiquid markets. It doesn't matter if it's an illiquid option contract, illiquid futures contract, illiquid equity. We do not want to wander into illiquid markets. And sometimes that illiquidity is just the fact that a certain option isn't traded that much, or a certain stock isn't traded that much, or illiquidity can come by way of what we have today, bank holiday. Now, as I jump over to the calendar, please remember, even though this is starting off with a bank holiday, we do have, and I'm kind of surprised to see it on the schedule, but we do have an FOMC member speaking at 11 o'clock. It's a speech at the Institute for Monetary and Financial Stability it's in Frankfurt, so that makes sense. They're not here in the States, but Waller will be speaking. So I'll be curious what the futures markets do at 11 o'clock. That will be something to maybe mildly keep in mind. We have housing starts in Japan. No, I don't need to know about housing starts in Japan. On Tuesday in the U.S., we have housing something. There it is. HPI. I know we had a housing number of some sort. We have the HPI, which is a purchase price of homes with mortgage backed by Fannie and Freddie. That's tomorrow. I knew we had a housing number. And then we go into consumer confidence. Everything leads up to really the two main hot zones for me this week are Lagarde speaking on Wednesday. You might say, what does the ECB have to do with what you're watching, Rog? Remember, European Central Bank monetary policy and messaging is going to affect the US dollar. We've seen that already by way of the surge in the euro and the way the US dollar has weakened. And if that's going to continue, it's likely going to be on more hawkish messaging from Lagarde, or if she's going to reel that in, right? She probably does not want to see a super strong euro right now. So we'll see what happens at 7 a.m. on Wednesday. That takes us to the ADP non-farm employment change, which this week, because of the bank holiday, gets pushed to Thursday. And that brings us to the second most important hot zone this week, which is, of course, just sort of the trio of the unemployment rate, the non-farm payroll number, the headline number, and then the average hourly earnings. So two big hot zones this week. Of course, NFP is one of them, but I'd say Lagarde is the other, especially if you've been trading currencies. All right, so moving on to your questions. Let's get to them, shall we? Mark asks, I've got BX. Okay. Got BX at 100. All right, nice. Completed a 1, 2, 3. Yeah, okay. Through about, that 1, 2, 3 was complete through about 109. All right, and going yellow from, yep. Okay, when the 1, 2, 3 completed, how do you know when to exit the trade? So the 1, 2, 3, there's two ways you can do this. Remember, Charles Dow never really codified Dow theory, but we can use support and resistance within the pattern to do so. You can keep a tighter stop below the 3 point, or really traditionally the stop is placed below the 1. That's typically the stop. Now, as far as the exit goes, there's a couple, again, it's going to go right back to support and resistance. So you've got this on your screen. You've got the Darvis. So I would see where the Darvis levels are waiting. You might need to go back to the beginning of the year to find some older levels. There's a Darvis level right there, just in front of 125. I would also look for gaps, different levels of gaps. And then because this market's going into chop, I'd also keep an eye on that slow stochastic. Mark, I'd keep an eye on that slow stochastic as well. That's looking arguably overbought. But notice we're also getting very close to that Darvis level resistance right around 125. So that's coming together pretty well. That's stacking up fairly nicely. All right. Next up, Seamus asks, I wanted to share an indicator with me. Yeah, if you see me in any, if you have the V-score and the VWAP, you probably see me in the rooms. Just hit me up in the room. Just hit me up in the room, friend. And you can either reach out to Lorna. She checks all the code for me because I just typically don't have time to go through code. But you can reach out to Lorna next time you're in the room. Let her know, and you can share it with her. That's cool. That works. All right. With Europe raising interest rates a tad bit, right? And they're going to be coming out of those negative deposit rates come September. Do I expect to break the trend on? Well, I'll tell you what. It's pretty legit that trend is broken. It doesn't mean that we have an uptrend. It simply means that the downtrend is broken and now we're in chop. That's the way that I'll look at this. So both FXE and UUP trends are under pressure, and I would say broken. Once they're broken, does that mean that I'm necessarily out of the long position? Well, it depends on what my stop loss and cost basis were for UUP and FXE. And then the next part of it is, am I still bullish dollar and bearish euro? Remember, a broken trend is not a trend reversal. It's rather the trend transitioning into chop, and the chop carries with it the directional bias of the trend that preceded it. So that's the way I'm looking at that one as far as euro and US dollar. Yeah, absolutely. Next up is, let's see, it's a fine line between passion and addiction. I'm okay to say I'm fairly obsessed. Yeah, I'm okay with that. I'm okay with that. To have something you love to do, and then you get to share it with other people who are willing to put in the work and get great at it as well. That affords you an opportunity to make a living. Yeah, I'm okay with that. I'm okay with obsessed. I'm okay with obsessed. I think that isn't that passion addiction. Yeah, maybe that the growth of that is obsessed. Hey, I'm guilty. I'm guilty. Asking for a friend. I think there's a lot of us out here. Yeah, again, remembering that what we get to do, we're so lucky that we get to do this. We're so lucky we have a community that we can talk about this thing that we love to do, the market. So yeah, very grateful, very appreciative. All right, next up, what's my favorite surf spot? It's been a long time. I probably hardly even remember anymore. Um, hmm, depends on how the wind's blowing, right? Depends on how the wind's blowing. But none of it's really close. The closest spots we have around here up in an area called Deerfield Beach, and if not, up in Sebastian, which is a bit of a clip for us. What are my thoughts on EV stocks? Amal, I have not really been following that much EV stocks, so I'll have to put some thoughts together. What I would tell you is if you have a group, let it be. Actually, you know what? I'm actually curious. So, do we have a group we could look at? The one that's coming to mind is a couple. There's a couple. There's a couple ETFs, right? I was just looking at their volume. So one is lit, right? It's the lithium and battery tech. So when you say EV, my mind goes immediately to batteries. There is, I think there's another one called BAT, right? So lit, BAT, DRIV is another one. And I think the last one is IDRV. I'll have to check. I'll have to look at that. So that would be the way that I would look at it. BAT, lit, DRV, DRIV, and IDRV. But I haven't, again, really quickly, just pulling it up, looking at the structure of the grab candles, the wave, the propulsion, the JT, the trade flags, or the multi-trend. That'll be the first go at it, and then I'll dig into the individual stocks that are in it. Build out a multi-trend. I'll build out one of these for that. This is the way that we do relative performance in the Sector Secrets Mastery Room. We say, all right, if there is, let's see if I can't pull one of these up. I'm not sure if one of those are cars is another one. Okay, so what I would start with is go to etfdb.com. I don't know these folks. I think the site's terrific, and that's what I would start with there. So let's say you look up KARS, which is the Crane shares. Okay. So what I would start with is look at the volume. Look at the volume of each one of these ETFs and go with the one that has the most. The Crane shares, pretty low on volume. So the next thing we would look at would be maybe the DRIV. This is the Global X Autonomous and Electrical Vehicle ETF. Last time I checked, this was pretty darn illiquid too. So you might say, Rog, what are you looking at? I'd like to see something close to 1 million shares. I think the DRIV is about 200,000-300,000. So that might be a better place to look in terms of the holdings. And interestingly enough, the number one holding there is Apple, Intel, Google, Honeywell, Qualcomm, NVIDIA, Tesla, Microsoft, ATI, NXP, Baidu sponsor. I mean, it's a funny little, it's a global autonomous and electrical vehicle ETF. Funny little list, but just goes to show just what a tricky spot in the market that is. Right. And so I don't have a lot of experience with those. I usually don't focus on a lot of them. Yeah. Paul asked, for my instruction video playlist, it seemed that about 2 to 4 years ago, I had a slightly different approach to day trading, specifically momentum. So the only momentum style, Paul, is that due to the market shifts. The only momentum style shift is that I was more likely, even 4 or 5 years ago, as you mentioned. 2 years ago, probably not, but 3, 4, 5 years ago, I was more open to momentum breakouts on the clearing range breach than I am now. And a lot of reason for that is, quite frankly, the high to low range of the breaches, Paul, when you have a clearing range, and so some of this has to do with risk. Actually, almost all of this has to do with risk. So there was a time when the clearing range or opening range for the S&P was somewhere around 11, 12 points. Now it's almost, I think, three times that. So as the opening ranges get wider, those clearing ranges, high to low ranges, the risk goes up with that. So momentum trading a narrower range, when we had historically less volatility between 9 and 10 a.m. Eastern, it was an easier decision to make to get long on those breaches with the momentum of that break. And then as these ranges have gotten bigger and bigger, there's more risk associated with the point of validity. So my style really hasn't changed that much, Paul, really at all. My consideration of risk is going to be definitely based upon the measuring stick of the historical volatility. So that's really what it is. It's market specifically, to your point, is that due to market shifts, to volatility? Yes, to volatility. Evolution style, I am remarkably not that different a trader year 32 or 3 than I was, say, in the first 2 or 3 years of my trading, in terms of approach and style and mindset. Hopefully I've gotten better. And hopefully when I'm talking to you all 10 years from now, I'm better still. What I know more now. But in terms of how I saw the markets, I want to follow trends. I want to follow the path of least resistance. That was always a big part of that. Yeah. All right. So next up is, and thanks for the question, Paul. Really good question. Really good question. Let's see. If tomorrow at the open S&P is up 0.5%, okay. Is it gap and go? Oh gosh, I don't know, my friend. Yeah, is it a gap and go again? Here's what I'll say. We have a 5-minute setting on the clearing range tool that I share, I think, in most of the rooms. And I'll gauge whether or not it's a gap and fade or a gap and go based upon what happens during that high-low range from 9:30 to 9:35. So I don't know, my friend, because the minute I have to start going into predicting, I don't know. Yeah, I just won't know. But we want to do less predicting and more reacting, and we can react to a high-low range. Next question is, I don't have the lower part of the chart setting. Where can I get the full chart setting? So it depends on what room you're in. If you're in any of the simpler rooms, day trading, the trading room, options room, futures room, you get a version of this. There are some premium tools that I have running on this screen. 3 of them, I believe. One is just some custom slow stochastic visuals. The setting is the same, but there's some custom visuals. My multi-trend and my Darvis 3.0. So there's I believe 3 premium tools running on this. Everything else, the trade flags, grab, wave, propulsion, Darvis 2.0, the Thinkorswim stochastic with the same settings as what I have here. It's not a settings difference, it's a visuals difference. And the multi-trend, those are not, but it just depends on what room you're in. And if you're in one of those rooms, grab the layout that I've shared with you all. And if you're not, head on over to countdowntrader.com and you can grab what we do make available for Thinkorswim free there, or you can search simpler within TradingView and get what we offer for free there. All right. KB asks, what do I think of Checo's win yesterday? I'll tell you this, KB. First of all, Leclerc goes home. That's his hometown. He had the pole. He was flying all weekend. Second year in a row. I think last year he didn't finish. This year, I don't know what was going on within that Scuderia garage, but yeah, just some terrible, terrible decisions took Leclerc out of it. And I'm not any particular Leclerc fan, but you'd like to see someone win their hometown race. How cool is that? And he really, by all rights, was on his way to doing that until they made some very silly decisions on pit stops. However, right, Checo's been around forever. You know why I liked it, KB, seeing Sergio Perez win. For those who don't know who Checo is, Sergio Perez is Max Verstappen, the current Formula One champion's teammate. They had the team orders. If you watched the race in, what was it, Barcelona, and they basically team ordered him he could have won that race. And I loathe that. And there's no reason so early in the season, when they're so close in points, to tell him from a team orders perspective, essentially to stand down. So I will tell you, what a great vindication for how well he's been running this year. And you in Monaco, that's huge. That's what the legends up there. So I love the win. I'm happy for him, but it was a good race. The rain made it kind of weird, a little strange with the delayed start, the red flag, but it was a good race. It was a good race. So I caught it on DVR. My husband and I went to go see Top Gun yesterday, which was really great. Okay, gang, it's Memorial Day. I don't want to take up a lot of your time. And as I mentioned before, somewhere between all the sales and barbecues and picnics and time with the family, absolutely, take a moment to be grateful for how lucky we are to be able to sit here in a room full of awesome people, talk about this thing we love. Very, very appreciative. So, and I appreciate everyone's time. I'll see you all tomorrow, same time, same station. And if you have any questions and you're catching this on replay, leave the questions and or comments below. Thank you, as always, for smashing that like button. And I will see you all tomorrow. Okay? Be good to each other.